Good morning, everyone. Welcome to another RF Crypto video. I hope everyone had a good weekend. On the crypto markets today, nothing has really been happening. All the action was last week. As you can see, in the last 7 days, Bitcoin went up by almost 6%, Ethereum 12%. But in the last sort of 24 hours, there basically hasn't been any movement in crypto. It's all stagnated, obviously, except for some cryptos such as Terra moved up 3.5%, Avalanche 4%. But obviously, as I said before, because of the decoupling factor and the fact that the cryptos are getting less and less and less correlated with Bitcoin, they have their own token-specific factors that cause the prices to go up and down. But in general, if we put the market together, if we look at it as a whole, markets haven't been going up or down. I think there is a lot of consolidation going on. Of course, there is a bullish sentiment in the market at the moment, so the consolidation might be because of that. People are huddling for the prices to go up, for them to then sell and make a good profit. Looking at the Bitcoin charts, we can see that Bitcoin has been trading between 40,000 and 42,000. So this support and this resistance level has been in effect since the 16th of March. So it's been a week since the Bitcoin has been trading between 40,000 and 42,000. And we have seen moments where Bitcoin price tries and break this 42,000 resistance level to try and go up to 45,000, but it doesn't seem to be doing the job because the bulls don't have enough power to counter the bears who are reluctant to let go of this range. So whenever the bulls try and push the prices up, the bears inevitably bring the prices back to this range again. Looking at the price of Ethereum, if we look at it closely, it's been trading at a range of 2,850 and about 2,990. And ever since that massive rush last week, which caused the price of Ethereum to go up about 12%, it has been stabilized, and this range has been dictating the price movements. It tries to break the almost $3,000 resistance level, and the bears push it down, and then the bears try and pull it below 2,840, and then the bulls come back into play and push the prices up. Similarly to Bitcoin, Ethereum, and all other cryptocurrencies are facing this sort of consolidation, and I think it's going to happen for the next few days before there's an imminent either bull or bear breakout. But I think that things are looking a lot more bullish than bearish. This isn't financial advice, but all signals point to it. So one of the things that are making people believe, and myself as well, that we are meant to go into a bull market or that the markets are doing well is that stocks are acting like they no longer care about the war. It appears that just in 1 month, markets are beginning to forget that there is any conflict in Europe. The main trigger for volatility in the previous weeks is becoming an increasingly impotent market mover after the shock of sanctions came and went. So no longer can any escalation or de-escalation of the conflict cause any price movements in the stock. They seem to have forgotten about it completely. So where Asia leads, Europe and the United States follow this week. Markets are heading higher, and in the case of Europe's Stocks 600, which is the top 600 stocks in the European Union, they've already eradicated losses engendered by the conflict. Global stocks have gained back almost $5 trillion in market cap this week because of a potential wave of stimulus in China and oversold stock prices. So there was concern that a lot of Chinese real estate companies were going to go default and bankrupt, and there was concern that the tech stocks would suffer massively in China. However, the government came out and stated that they're going to support them and they're going to give them some stimulus, and also the fact that they're going to collaborate with the United States government to ensure that no dual listed company gets delisted. That gave the Chinese market some more strength, and that caused the prices to rise. And should the good news continue, attention will return to Bitcoin's correlation with stock markets, and in particular those in the US, as a potential pretext for price strength. So there is a strong correlation between stocks and Bitcoin, especially high-tech stocks. So if those go up, it's inevitable that Bitcoin will go up as well. There's another important factor that is pointing to a bull market, is that Tether activity has gone up significantly. So interaction with US dollar stablecoins are a key indicator of overall interest in crypto, and their trajectory is now pointing clearly upwards, upwards, and upwards. So 2 days in the last week saw more active Tether addresses than at any other time this year or last year. Also, sentiments exit weeks of extreme fear. So at a fear and greed index of 31 out of 100, the index measured its highest since March 4th and points to the worst of the macro-enabled cold feet among investors, at least temporarily being alleviated. So because people are becoming less fearful, people are becoming more brave, if I may call it, they're going to invest more into crypto and they're going to take more risks and they're going to move money from lower risk stocks and bonds and gold to higher risk tech stocks and cryptocurrencies. So this will inevitably push the prices up if the predictions are correct. Again, this isn't financial advice. Another bullish signal in the market is that Ethereum outflows from exchanges hit 2022 peak as Ethereum price surges. So more than $500 million worth of Ethereum was withdrawn from crypto exchanges earlier this week as traders look to hold onto their crypto in anticipation of bullish price action. When there's a lot of movement out of the exchanges, this means that people are moving their cryptocurrencies into cold wallets, and that means that their plan is to hold these cryptos for a long, long time. And what does that mean? That means that they expect the prices to move up. And it is a fact that markets, and this is crypto included, moves on the basis of behavior and expectation. So if there's expectation that the price will move up, the prices will move up eventually. The data shared by Into the Block, a crypto market research firm, shows that 180,000 Ethereum was withdrawn from exchanges on Tuesday. And this figure represents the highest aggregated exchange withdrawal of Ethereum since October. And at the time, the outflow of Ethereum preceded a 15% price increase for Ethereum within 10 days. So there is a precedent. The last time that so much Ethereum left exchanges was when we had that bull run in October, November, and early December. And they're pointing to the fact that this is happening again. It's a repeat of what happened in October and November. I don't think it's going to be that extreme, but the expectation is that the prices are going to move in an upwards direction. And of course, Ethereum's gains in the context of the wider crypto market can't be ignored. Every top 10 coin has seen a price increase of at least 5% this week. And this was after the Federal Reserve announced a 0.25% interest rate hike on Wednesday. All of the cryptos went up after this announcement because basically what Jerome Powell said, who is the chair of the Fed, he basically said that the US economy is fine. We can afford interest rate hikes. Unemployment is extremely low. Economic growth is quite high. It's lower than expected, but it's still high. So things are looking good. So the markets react positively, both the stock market and the crypto market. On other news, the days of crypto being off of DC's menu are very quickly coming to an end, says Andrew Yang. So before the rise of the Bitcoin mayors, like Francis Suarez in Miami or Eric Adams in New York City, these are very, very pro-crypto mayors in the US who receive their salary or part of their salary in crypto and also want to implement city coins. So before they became mayors, there was pro-crypto presidential candidate called Andrew Yang, the Venture for America co-founder who counted Bitcoin, math, and universal basic income among his main talking points. So after unsuccessful runs for president in 2020 and NYC mayor in 2021, Yang is now focused on his forward party PAC and is lobbying DAO Lobby 3, which aims to use crypto to spur change in Washington and in the US by extent. So he says that the days of folks saying that there shouldn't be any regulation in this space is ending, but the main question is, what will the rules be? Will they be intelligent guardrails that help manage the risks and some mainstream aspects of Web3? Or will they be unmindful of the positive sides of the ledger in terms of innovation, jobs, and technological development? And this is the most important part. What are the regulations going to be in the US? The regulations should be good. They should be conducive. They should allow companies to trade freely and to do their things freely. And they should allow the common folk to trade in crypto, obviously in a regulated manner, but not too restrictive. Because if the rules are too restrictive for companies, they will just leave the United States. They will form companies in offshore jurisdictions such as Bermuda and other countries that will be quick to adopt crypto regulation, and they'll be very, very lenient because they would want to attract all these big crypto companies. Lobbying for openness towards crypto in DC will be a challenge because Yang guesses that the number of people in Washington who have a crypto wallet is vanishingly small. He also acknowledges that certain prominent politicians have repeatedly made statements about crypto that indicate hostility or negative attitude. But now times are changing. These politicians cannot ignore crypto and its greatness and its potential for change. However, they are still very, very, very hostile against crypto. Hopefully that's a very small percentage of the politicians, and hopefully most politicians are on board to sort of create a legislation that will allow crypto to be traded freely, that will allow the companies to operate in an environment that is conducive for their development and for the development of the blockchain industry in general. Finally, El Salvador's Bitcoin bond issuance apparently is delayed. So remember that in November 2021, President Nayib Bukele announced plans to build a Bitcoin city funded by the sale of bonds with an annual coupon rate of 6.5%. Half of the funds will be used to accumulate Bitcoin, with the rest earmarked for infrastructure and Bitcoin mining powered by geothermal energy. However, these volcano bonds have yet to hit the market. They're supposed to already be in the market. However, volatile international conditions are likely a key culprit in the delay. And we'll just have to wait to see, because it's exciting. It's the first ever Bitcoin-backed bonds. We are here for innovation. We are here to see how markets react to these new products, these revolutionary products, and how the funds are going to be used for these plans. Will Nayib Bukele really use the funds for the plans that he has earmarked? Or, in a highly corrupt country, will the funds mysteriously end up in other avenues? We'll just have to wait and see. And with that, we come to the end of today's video. Thank you very much for watching. If you enjoyed the video, please leave a like, hit the subscribe button, share this video with your family and friends, and I'll see you tomorrow for the next one. Invest wisely and cheers.